Welcome everyone. This is the third installment to this $5,000 account that I'm doing. This week marks the end of one full month trading on this account. And boy, oh boy, our results are amazing. What actually happened was like so far during this whole month. So this last week I basically made $1,735, in on on this account. We drew $500. I think this was a very, very good week. There were a lot of amazing opportunities to take trades. So let's take a look at this right here. Let's go back towards the 25th September. That's when the account was started. We look at there was a $5,000 deposit. The first week we drew $150. The second week, we drew $175. So as you can see, the withdrawal amounts are getting bigger as the lot sizes are increasing here slowly and as the balance is increasing. The third week, we drew $200, and the last week, we drew $500. So in one full month, the $5,000 count, it grew to 8,200, and then we withdrew $1,000 at this point. So all in all, we drew $1,000, and trust me, man, if you're running a $5,000 account, withdrawing $1,000 is huge. It's really, really, really big. So in retrospect, this is the same thing as withdrawing $100 from a $500 account after a full month. Same thing as withdrawing $10,000 from a $50,000, during a one full month. And it's the same thing as withdrawing $100,000 from a $500,000 account after one full month. It's just perspective. If this was me on my bigger account, you know, the withdrawals would have been bigger, results would have been bigger. So that's what we're doing on a small account to actually show you the correct way how this should be done. So let's take a look at the first trade, right? So what are we doing? Let's go towards this, go towards October 16th. All right, let's take a look at the first trade. So this trade was taken in conjunction with pound yen, because normally sometimes we've seen that there's a little bit of a correlation, if not a lot, between pound yen and gold. Now, this trade was taken, I was looking at both pound yen and gold. The whole analysis was buys for the both pairs, right? Because I had buys planned out. So specifically, so I'm going to go over gold over here. Gold buys were planned out because, we had a big rejection to the downside on the 4 hour, 1 hour time frame. We had made a high on gold, and I was looking to see, okay, if we're going to create some sort of support, because at this time, price was pushing down. During the Asian session, we were retracing after making a high. So I was like, okay, you know what? If we can, if we can create support, and if we break support, we can continue to push down. But if we create support and there are opportunities for buys, then we have this, 30 pip range for price to move in. So I'm like, okay, you know what? I'm just going to look for buys. Now, looking at pound yen, let's take a look at pound yen over here. 30-minute time frame. This is on here, right here. Okay, perfect. So for this, I was looking at the 1 hour time frame. Let's take a look on the 1 hour. Where is it? Yeah, right here. This is the 1 hour time frame. Let me scale fix this. Common. All right, 1 hour time frame. There we go. Now, this happened in almost the first hours of pre-London. What happened was that I took a buy on gold. I put stops below this candle, and at the same time, I started looking at pound yen in tile mode, right? So this is your tile mode right here. So if I go back, this is the tile mode right here. So start looking at pound yen, because this 1 hour candle, now you have to be really attentive towards what candles are doing in times of volume, right? The 1 hour candle here at this point, we basically, okay, let me go back over now. So we basically broke the low of the previous candle, closed bullish. So I'm like, okay, you know what? If there's volume pre-London, I've done this a lot of times, pre-London volume, if we break the high, what's the probability we can continue to push up? My target was around 167, 168, right? Almost 167, 900 to 168. That was my target, right? And that was about, I'd say like 90 pips away. And price moved so quick, so quick in a very short amount of time. I got around, like 28, 30 pips on pound yen, almost got the same move on gold. And at that time, I just closed the positions and then I called it a day. Pound yen, by the way, it went further higher after that. It went almost like 50 more pips, and I was like, okay, you know what? Perfect. Got my first trade of the day, and that was done. So I'm going to call this the first trade of the day since I both took them roughly at the same time. Now, next one. This was a buy on pound yen. On this one, I gave my trade a second chance on pound yen. The whole idea was that the 30-minute candle has created a support. We have a wick over here. If we get some confirmation that price is going to continue pushing up to fill this wick, I think that could be a very good trade. So what happened here? Now, as the 30-minute candle broke the high, let's take a look on the 15-minute here actually. All right, let's take a look at 15 minute. Okay, so as the 15-minute candle broke the high of the previous candle, I was like, okay, you know what? Perfect time to take a buy. I took a buy. This was a loss around $49, right? I took a buy. Price didn't go up. It came down, and I closed the trade. Now I'm like, okay, you know what? Maybe I'm going to give my trade a second chance. Okay, waited for the second chance, right? This trade right here, lost about $45. Um, Price broke the high. I was like, okay, perfect. This has to go up to fill the wick. We have almost like, like 29, 30 pip range for price to move up from where my entry is. Price came down, closed half, price came down, closed another one. And then I was like, okay, you know what? Gave him by the second chance. Even though we went up later on, you know, I could have faked it. Anyway, even though later on we did move up, and I was like, okay, you know what? Whatever, that wasn't. Now, one important thing to note here is that that wasn't my time to trade when price did go up. I was basically not at the charts, so there was no way for me to take that trade. I just took a buy and gave my buy a second chance, and it didn't work out. Oh well, no problem. Now we went on to the next day, and this was a sell on pound yen, and these were roughly two sells taken at the same time on pound yen. And oh, I still got these zones drawn over here. Okay, perfect. So the reason why these sells were taken was one. Now, okay, let's talk about this, right? So we had a resistance formed, and then price came down, created support, moved up, created a top right here. Now, what's interesting about this top is that this candle has a longer wick than the body. Now I know I'm speaking a little bit quick, but at the same time, I would really hope that someone could make notes about these things because these things are very, very important, right? These things are really going to help you in the market and reading the chart. So basically, we created a top wick with a small body. Next candle broke the low, and it seems like that's when I took the trade. Wrong, right? This is on the 1 hour time frame. That's wrong because on 30-minute time frame, that's not what it looks like as well. And I know this trade because I know exactly what was happening here. So, to really truly understand this, we need to take a look on the 5-minute time frame, right? Because very important. Because if we look at the 15-minute candles, came down. This candle came down, broke the low. This candle broke the low, but someone can argue, well, it broke the low. Why didn't you take a sell over here? Because what happened was that the 30-minute candles, they started to break the low. Well, the first 5-minute candle right here, it started to break the low of the previous one in the first few minutes. And as we all know, that's a risky maneuver right there, right? When we break the lows in the first few minutes, it's very risky. So that's what happened. We broke the low. I was like, okay, you know what? We're breaking the low in the first few minutes. I'm gonna stand by and I'm not gonna do anything. I'm gonna wait. And candle closed bullish, and this was the close of the 15-minute candle. You see where 5-minute candle basically just like jerked off. And then this is when the 5-minute candle in the last few minutes started to break the lows here on the 30-minute. Again, the previous candle started to break the low. I was like, okay, you know what? If it has to move, it's got to move now because we got a clean range, we got time of volume. Let's take that trade. Took the trade, put stops based on the 5-minute, 15-minute. Took actually two entries, right? One was one lot, and then had to adjust the second position. So it took me some time. Took me like 4 seconds to adjust it to point 0.5. And basically, price went further down here. But I took what I could and then I called it a day right here, right? So we've taken 1, 2, 3 trades so far during this whole week. There were multiple positions, but a trade idea, I'm going to call it a trade. A trade idea is going to be called a trade. Now, let's look at the next one right here. On the 19th, I took this trade. This was a sell on gold. Let's take a look at this sell on gold. Sell on gold. This was a little bit tricky on the 1 hour time frame. It was a little bit risky because okay, so the whole idea, so this trade was taken at around, pre-London as well, a little bit before pre-London. We've seen again volume come up and again, right? And gold basically had this range to fill on the higher time frames here as well. right? We had this area to fill in the higher time frames. That was the whole point. So now, when our candle closed bearish, next one our candle started to break the low, and I was okay. You know what? This seems like a very, very good opportunity to get in on a sell where we can potentially make some money. So let's take a look at this right here. All right, right. So 15-minute candle closed like this. Next candle closed like a doji, but I really wanted to take a sell. So what I did was I entered with a one lot. Entered with a one lot, 15-minute candle right here. Put my stops above the previous candle. Let's take a look on the 30-minute time frame. 30-minute also had a lot of range right here. And as we can take a look at the previous 30-minute candle, this basically broke below this market structure support. A market structure support is where the candles create supports, not rejections. This is a rejection right here. This is market structure. Candle came bearish, bullish, boom, support form, candle broke the low, next candle was starting to break the low of the previous candle, which was also on the 1 hour time frame, took the sell, price went down 13, 14 pips because I thought that we're coming up to a rejection area on gold. So I closed the trade and then price fell more further down. Now I'm like, what the hell's going on over here? Right now, since we had more range for gold to come into, I was like, okay, you know what? Let's see if we can get this again. So what happened was price came down, we created another support, candle closed bullish with a big exhaustion wick right here. Now the difference between a wick fill and an exhaustion wick, there's a video I've done, and that's on my YouTube, my playlist. So next candle, this was another sell on gold, right? Next candle, the second 15-minute candle of the 30-minute candle started to break the low of the previous candle. And I was like, okay, perfect. This is an opportunity to take a sell. Took a sell, price came down. Let's take a look on the 15-minute time frame. Yep, right here, right? The first one was into rejections, but the second one felt more of a solid confirmation for price to go down. Took the sell, and it was like a no-brainer at this time, and price went down, and basically that was it, right? And then there was a third sell on gold. Now I was getting very, very confident at this point, right? Third sell on gold. There was a lot of volume. There was still around 30, 40 pip range left. So I lowered my lot size to 70-cent lots. Now this was a little bit tricky. This was done on the 5-minute time frame. I very precisely remember this trade. Now this is a 5-minute time frame. If you wanna focus on where the candle started and closed, right? So this was the close of the 15-minute candle, right? This was the close of the 15-minute candle. And I was looking to see that, okay, if the next one can break the low. 5-minute candle started, 5-minute candle pushed up. This was the new 15-minute candle here as well, which pushed up, created a big exhaustion wick. Next 5-minute candle broke the low, easy. It would have been a sin not to take this sell after this run. So I had a positive run here over here. So I was leveraging my props. Like, when you go to the casino, I don't want to say I was acting like a casino here, like gambling, but this was a calculated risk I took with a lower lot size, right? Now, let's take a look at the next one on the 20th October. This was only one trade I took. This was a buy on gold here. Let's take a look on the 15-minute time frame. This was a buy on gold. Oh yeah, this is very, very simple. I remember this. Okay, so this was on the 15-minute time frame. Basically, what happened was that price moved up with a lot of volume on gold, left a wick over here. It's basically moved like 57 pips. Next 15-minute candle closed a bearish candle, and that was about it. The next one started to break the high, and there was no wick at the bottom. Started to break the high in the first 3 minutes on the 15-minute. And this was also the 30-minute candle pushing up as well. So it was like a no-brainer for we had volume, we had wick to fill, and basically, anticipated actually for price to continue pushing up to 1637. And this is a pretty good range. We had like almost 80 pip range, and that's where I wanted price to go. I had a one lot running at this time too. So, and then candle came down, rejected here, and then next candle started to reject here as well. And I was like, okay, you know what? Maybe this is not maybe we're going to have a retracement where we can create support to move up, but I didn't know how far the retracement's going to go, whether it's going to go to my break even or whatever. So I just closed the trade, was already up in profit. So I was like, okay, you know what, let's take what I can get and let's come back the next day. Then came back the next day on the 21st October. This was a sell on gold on the 21st October. Let's take a look over here. This was a sell on gold. This was something. What again? I've said this before. This is something which is um, based off of experience and based off of things you've seen happen over and over again. Now, we had an impulse move at pre-London, right? Whenever we have an impulse volume move in a session without any news that's really changing the economy or whatever, we will have corrections, right? And that's what this correction was based off of. So looking at the 30-minute time frame, price moved up. We broke the low. A lot of volume pumped in. 30-minute candle moved around, 100 pips. Next candle, closed bearish. Took the sell as we broke the low. Stops were above this candle. I was a little bit late based on the 15-minute time frame, so took the sell. Price came down, got 20 pips out of it, and I was like, okay, you know what? Perfect. Now, a few minutes later after that, since we had volume and since um I was also up in profit, so I was really trying to push the envelope on how good I can call price, and that's all what this was based on, right? So we had a rejection, we had a support, we had a massive rejection off of support, and I was thinking, if we can drive down, can we drive back up? Right? Can volume drive price up back again, since now we have clean range? But all I needed was the candle to break the high of the previous candle, which was a rejection candle right here with an impulse entry, and that's what happened, right? Took a buy. Actually, hold on. This was a sell on the 21st. This was the buy right here, zero point 0.5, right? So I lowered my lot size. Price went up, got about 40 pips out of it, made $200. That was it. And then right after that, I did a withdrawal for $500. This was also a Friday, so I did a withdrawal for $500. And then I took a sell in pre-New York. This was a lower lot size. Took a sell on the 5-minute time frame. Really wanted. Well, it was also the 15-minute time frame, right? So wanted price to move down. Price went down. Actually, price went down. And this I took as price was retracing to keep my stops above the previous candle. So price went down in profits, came back up to entry, and I closed 50%. And at that time, actually, no, I didn't close 50%. I closed the whole position because I was like, okay, you know what? If it's coming to my entry after being in profits, maybe it's just going to continue to move up because we have a clean range to left and right. But I should have trusted my instincts. Because after that, on the 15-minute time frame, price actually went down quite a bit, around like 40 pips, right? So I think this week went really really well. Now the account is up at 8,200. Probably next week, the whole week, I'm going to continue doing one lots, and the whole goal of this account is to see that whether we can come towards, let's say, like if I can take it to like 15,000, 20,000, because I think if I can take it to like 15 to 20,000 by the end of this year with discipline, what this going to prove is that if you stay consistent, if you focus on 1 or 2 trades a day, or maybe in my case, I took a little bit more, but I managed my risk, right? If you stick to let's say 3 trades a day, with not more than 2% risk, I think you can make some great gains over the span of 3 months, and your confidence also will increase after that too. So hope this helped. Hope you guys enjoyed this. We're going to see you guys for the live streams on Monday. Take care and have a great rest of the weekend.